First up, the disclaimer. Nothing in this video is intended as financial advice. Please pause the video now and read the disclaimer in full. For complete transparency, I have not been paid any compensation for this video, nor do I hold any tokens or equity related to Dusk. For me, this is a particularly fascinating interview because the topic is so interesting, and also because we talk quite generally, and Yella even gives specific actionable steps we can look at when investigating some potential investing opportunities. That will all be coming up during this video, and I want to let all of you know there's going to be time jumps in the description to all of the questions I ask. So if there is any particular burning question you have right now, open up the description and you'll see all of my questions that I asked throughout the interview, and you can choose to skip ahead if you wish. Unfortunately, when exporting the video, there was an issue with the actual video itself. Hence, I only have the audio file, and I've decided to overlay that on a cool moving background, as that seems to be the theme in recent videos. Without any further ado, let's begin with the interview. So today I'm joined by Yella from Dusk Network, a blockchain protocol focused on security tokens. Thanks so much for joining me, Yella.
Absolute pleasure.
Okay, do you want to just introduce yourself and quickly explain your background for the audience?
Sure. So my name is Jelle Paul. I'm the business and project lead at Dusk Network. Like you said, Dusk, privacy-oriented protocol for digital security is kind of the lingo that we're slowly moving towards. I have a background in kind of the crossroads of IT and business always. Worked for a few companies, probably most notably application platform startup called Mendix, which was recently acquired by Siemens, and the energy company Shell, where I co-founded the enterprise blockchain team and later did a stint in renewable energy before moving out to start my own ventures. Now for the last year and a half, been working on what is now publicly known as Dusk Network.
Okay, that's a nice segue. Do you want to just break down, give like the elevator pitch? What exactly is Dusk Network?
Yeah, so it's a privacy protocol. So it's a layer zero, layer one. This means we've built our own consensus. It's really from the ground up. So we see a lot of difficulties or challenges in the security space, the tokenized security space, and we think that they should be solved at kind of the deepest layer. And in a nutshell, that's what Dusk is for. Now, all these challenges and things we want to solve, I'm sure we'll get to later.
Why security tokens or tokenized securities, digital securities, whatever you want to call them? Why focus on that instead of the traditional method in blockchain, which is utility tokens?
Yeah, so utility is an interesting beast, right? Like in many cases, it's yet to be proven, and it's also, we can argue that, for example, in the case of ERC20, because it's not really a controllable standard, that we see a lot of the propositions built on top of Ethereum, for example, arguably detract in value from the network. So, you raise money and then you don't deliver, or it kind of scams, or something bad happens, and basically it doesn't live up to the promise, right? But you did take value from that network initially through a raise, or often a significant raise. Which I think can be quite detrimental. So I'm not necessarily against utility. I have dubious thoughts about all utilities having their own value and price discovery.
I agree.
And when you look at the security space, it's obviously where the big buy is. So we see a lot of asset types that will either benefit from things like fractionalization or liquidity, or the security token promises, and also a lot of ventures that can benefit from getting more access to this market, or making their administration easier. These are always kind of the more boring USPs, but very relevant for these type of businesses. And yeah, it's basically the world's biggest market, and we're starting to see some real potential in the DLT space, meaning that, well, obviously Dusk is a protocol. You can do other stuff on it. You could build a dApp or whatever you want. But when we look at creating a smart contract standard for securities, our features match this financial market very, very well. And that means that, well, both tactically and strategically, it's also a great commercial choice.
Okay, let me jump in here then. So I think a lot of people on my channel, because I've spoken about security tokens quite obsessively over the last couple of months, they're familiar with, firstly, they're familiar with Ethereum, because who isn't? Ethereum is basically the base layer, and companies like Securitize, Harbor, Templum, Own, etc., actually not Own, but other companies are building on top of Ethereum and basically writing in code and creating new protocols so that basically you can follow the regulations. They're building that on top of Ethereum. They're taking Ethereum smart contracts and using that. If you guys are a blockchain protocol with essentially these regulations built in, do you think there's still a need for the companies being built on top? Are you essentially trying to somewhat replace Ethereum and Securitize, as an example, in one go?
There's a lot in that question. So replacing Ethereum as a whole, no, because Ethereum is a great smart contract standard, right? It's more general purpose. It'll do a lot of things.
But I mean, it's specifically for security tokens.
In the security space, we will at least attempt to leapfrog it when we look at the compliance and issuance in the secondary market for digital securities. That's not to say that Ethereum will not adapt and become a great alternative, but in essence, yes. When you look at the layer 2 protocol / platform players that you just mentioned that build on top of a protocol to provide a certain service like issuance, then we might replace some of the functionality that they bring today, but that's actually quite positive for them because when you look at the things that they have to code on top of Ethereum, like you say, is generally to work around the limitations of Ethereum and to make an issuance or smart contract or security compliant and transferable, and you name it. And with Dusk, you can do that directly on the protocol level, meaning that they can focus on arguably what they're good at, which is consulting, bringing successful issuance to market, identifying the correct projects, and really, adding that type of value and not just being limited to, Ethereum is the only game in town, and half of my work is working around the quirks of using something that was never really intended to be used there specifically. So sure, it will take some of that away, but yeah, it's like I don't know. I guess the guys working at the post office weren't angry when they started delivering by car instead of walking.
So it's particularly the layer 2 protocols that I'm really interested in. So I'm trying to think of it as like run through a scenario, for example. So I'm trying to issue my own security token. And currently, I may go to someone like Securitize and say, can you handle the technology side for me? Whereas if you guys are somewhat replacing them or disrupting them at least, does that mean you're going to have like a platform where I can use your blockchain and very simply put this together myself and potentially not even have to go to them?
Yeah, so there's a few options that we're working on. So first of all, what we're building is standards, right? So you're familiar with ERC20 on Ethereum, and that's just a configuration of an Ethereum smart contract, right? A standard configuration. And there's all types of ERCs, and likewise we are building what we call XSC, which is a confidential security contract. Basically a standard for security issuance, like shares, for example. But you can see, there might be a different iteration of the standard for bonds or you name it. And all these standards will become public. So you'll have your typical development kit, and if you're savvy enough, that will give you the tools you need to do it. If you want to outsource all of that, then, well, currently we are doing it for a few companies, also because we want to get really good at it and really, get a feeling for it. But ultimately, this will be more kind of a partner channel strategy, meaning we focus on the protocol, on the standards, and other people can apply their business model to it and help propositions through this process. So when you look at it pragmatically, I don't want the securitizers of the world to be fully disrupted. I think they should get really good at what they are already good at, and probably at least in the short to midterm, that means that if you go to them, from my ideal perspective, they'll say, okay, of course we can do this, and do you want the option on Ethereum, and that means A, B, and C, or do you want to do it on top of Dusk, and that means D, E, F, and there will be hopefully more benefits to predicting us, right? That's the whole idea. But we're also building some of these partner channels ourselves, meaning that we are identifying and currently onboarding partners that we will basically share the deal flow with, or the STO demand basically that we receive, and they are building it on top of Dusk, and over time, you want more and more of these players to pick it up organically, but initially this will obviously need some work to build the ecosystem.
Yeah, you touched on something there that's very interesting. So we spoke about it last time, and I basically said, I think people like having a company to go to. Part of what is scary about blockchain is the idea of building it yourself or trusting something you don't really understand, why people like to instead go to a securitize. And as you say, you may be incorporated, so you have the Ethereum or the Dusk option, and they have the optionality built in. So I actually interviewed Jamie Finn from Securitize recently and pitched him the question, not specifically about Dusk, but I said, what do you think of blockchain protocols that are focused on security tokens? His response to me actually said it was a bad idea. And the reason being, he gave one example. So custody, he said, was a big one. In the current traditional financial markets, you can't be the person who trades items and custodies them at the same time. You have to have that legal separation. Ethereum, while it has many limitations, you definitely, well, everyone would agree, I assume, that custody and things like that are being built out far sooner than most protocols, because essentially it's such a large network effect. So how do you overcome issues like that Ethereum is overcoming through its large network effect of developers?
Right, so you mean custody specifically, or you mean in general how you compete with a bigger player?
I mean, let's cover both. So custody is an interesting one, but if you have more to talk about, jump into that.
So custody is an interesting one, right? So what we see in the custody space, so custody is basically someone holds the assets for you, so that you don't have to, or then you're not bothered with it. Now, in many cases, this is positive, especially when you look at institutions or big corporations, or maybe even a issuer that wants to put the underlying shares somewhere so that the tokens can freely move. But there's a few nuances here. There's quite a lot in there. So these actual security tokens, these shares, that you have as a person, you probably want to hold on an exchange or in your own wallet or somewhere, but it's not typically, you're not the typical kind of client of the custodian, right? It's for these big businesses. Now what we see, and this is maturing a little bit, is that in the blockchain space so far, we have some initial custodians, but they tend not to be able to offer insurance yet, for example, which kind of defeats the point, because you want both. Now, this will mature quite rapidly. You'll see quite a lot of players doing both, but it's an important point to make. Now, what you then want from a custodian is that either they keep your big position of security tokens, for example, and insure it for you, but that's no different from kind of which protocol you use. If you have a big position in, for example, an Ethereum-based security or in a Dusk-based security, you might still, as a fund or a VC or a pension fund, you name it, choose to place these tokens with a custodian. It's not really a protocol limitation there. If you look at it from a tokenization perspective.
But I guess what you have is that because Ethereum is so large, you have many custodians all competing with each other and trying to build out solutions. Whereas other protocols, potentially Dusk, isn't that competition yet, because you haven't proven the desire to provide a custody solution. Do you see where I'm going with that?
Right. But and then we really go into the field where how do you compete with a bigger player, right? And obviously Ethereum is currently the model or the big guy in the space, but even ETH has arguably only been in a position for, let's say, 2 or 2.5 years, where when it really started making its comeuppance, and also was still a very young market, and you'll see a lot more other protocols differentiating itself for certain things, like Ethereum. It's amazing, and the developer community is arguably the model that everyone is going for. this also slows it down a little bit, but it also makes it extremely robust in other areas. And I think this is generally a good thing. However, what we're trying to achieve is quite different, and over time you will see limitations that Ethereum has that brings cost or simply encumbers issuance or traders, and then for specific things you will go through specific solutions. For example, the open ledger featured by Ethereum suffers greatly from its inability to be GDPR compliant or serve under multiple market manipulation laws, these type of things. And these are very specific things that, it's also not really, it was never intended to do that. But the cracks won't start showing until a little while down the road, because now there's only a few security tokens. They're usually not traded or traded in a very, very closed environment, meaning that these big edge cases or maybe not even edge cases have yet to appear. And when the cracks start to show, it will be very, very important for there to be solutions specifically built for this. The financial market is, it's not even a niche, but it is quite specific, meaning that it, in our opinion, deserves a solution built specifically for it. And obviously where there's a bit of a roadmap in order to become a proposition of that magnitude. But when I look at the actual user traction and the actual parties that for us are really relevant for adoption, we see a great level of acceptance, and the PR machine needs to, in some areas, precede it, and in some areas catch up. But that's simply the name of the game.
Well, you bring up an interesting point there with adoption, because for me at least, you're going to have a large number of custodians fighting to be the number one custodian for Dusk Network when you have adoption, because if a lot of companies start using Dusk Network to produce their security tokens, that brings competition. So how do you get to that first stage of adoption? How do you convince companies that are looking at Ethereum and saying, nope, that's sufficient? How do you convince them that Dusk is better?
Well, this really depends on the type of company. So you have a lot of companies that are generally quite savvy and are interested to try it, and we see a lot of that. And they are excited, for example, by certain elements where we basically display technological superiority, and then you have bigger players that they don't care about blockchain. Is not the right way to say it, but they're also they care about things like speed and cost and these type of things, because that's the type of decisions they make and the type of decisions they have to justify within their respective companies. There we see a standard like ours, which is relatively unencumbered by required middlemen in order to operate, be very attractive, because not only are they compliant, it works with a lot of other systems, and it's quite cheap actually for them to use and quite quick to deploy. And currently we're still really there to help them, which is also very appealing to these guys. So you'll see a mix of the generic digital securities wave, where probably almost anyone can help a few to market, and really attracting a few key players that understand why your specific benefits have merit to them. And we see that the narrative around compliance and privacy in trading, automated management of these assets, really hitting home with a lot of these companies. Also when looking at the secondary market, because what will be really key for a lot of assets is that this liquidity promise is something that you can actually deliver. So I think primary market will commoditize to at least a certain level, where obviously you can still be a very awesome consultant or an awesome business that people love going to. But when you also look at protocols, I think you'll see much more of a pull effect from the secondary market, meaning that if you are at the right trading venues, then that will be reason enough to almost use your standard. Whereas I don't see primary as a big push factor, because, well, it's a differentiator now, but even if we only fast forward a year, I think it will be greatly reduced. I think the issuance will be very difficult to create USPs that cannot be copied.
I agree. So I want to talk about your business model. How do you guys actually make money? It's always quite an interesting question because I don't know, some projects I speak to almost have closed their eyes and just raised a lot of money and haven't thought necessarily about future income to continue building the business. How do you guys generate profits?
Well, profit's not really the right
No,
word.
because your foundation, yeah. How do you make money essentially so you can build the business for the future?
Yeah, so what we've done is we've concluded a round of investment as well that has left us well capitalized for the next few years. In tandem, we are working on at least one big proposition that will basically feature on top of Dusk Network, which will be more well commercial in nature, basically. Whereas the protocol's goal is to be decentralized, to make ourselves redundant, to really have it, live out there. Things that build on top, securities, dApps, or exchanges, you name it. These are for-profit companies, right? And this is also something where we are. We have launched an initiative, but we have yet to do so publicly. But that should be.
Can you share any details? Even not necessarily specifics, just maybe the category that you're aiming for. So you talked about exchanges as an example. Is that something you're looking at?
It's definitely something we're looking at. So we're really looking at the ecosystem, right? So we want to build these pillars, whereas, if the protocol forms the base layer for primary and secondary market, then we want to meddle in both, whether that's through partners or our own ventures or, you name it. Dusk needs to be something that you can use end to end. We are quite busy in both of those. Primary is chronologically slightly more relevant because it obviously has to happen before you can trade stuff. But I think I'm only on a very minor delay. Like I said, secondary, I think, where things will really start to happen because ultimately this is about awesome assets and willing investors and really bringing those things together. Meaning this happens, I think, on trading venues. So I think we'll also see primary moving towards the trading venues.
So we're hinting without saying at an exchange.
That's our strategy or our belief that this is where the market will converge to. Then it's quite an easy deduction that our play would be in the secondary market.
Okay, and a more general question: where do you think the space is going to be? Let's say 12 months from now. So if we look back 12 months, there have been huge developments.
Or crypto blockchain in general.
Security tokens specifically. Like 12 months ago, we didn't even have any exchanges online. Now there's terrible liquidity, but there are at least the infrastructure is in place. What do you think in 12 months from now?
I think we'll see a lot more exchanges, that's for sure, because when we saw the initial ones kind of going live, or when we saw the beginning of the security token wave, and a lot of companies got into the rat race to become regulated. And in the case of a security token exchange, you are often regulated and subject to all kinds of license requirements. And typically these licenses, you'll see, they're roughly on a 12 to 18-month timeline to acquire. And a lot of companies are in this process right now. And we'll see those timelines starting to converge, let's say, between Q3 of this year up to Q2 of next year. So kind of that span of 6 to 9 months, a lot of exchange propositions go live because they're all in this license process right now. I think we'll have seen quite a few STOs, obviously, but also a lot of STOs that will not really deliver on the liquidity promise. So it will be a great fundraising tool for them. They will either not be able to get listed, or once listed, reach the conclusion that, actually, there's not really a reason why a $2 million startup should have a daily volume of 500K, right? Because it's just simply not going to happen. Also, because there will be very, very limited information to go off, because this could just be 5 guys building in an attic somewhere. There's a reason why these companies are typically private, right? Because they just need to build stuff and not deal with full-time investor relations, that kind of stuff. So there will be much more understanding about what does it mean to have or want a digital security for different segments of businesses. So, and then I'm talking maturity, size. A very big business, I don't know, $1 billion value business. Now that's a case for liquidity, right? If you emit a token, that you can really see people trading on a daily basis. Whereas a very young company, I don't see that much reason for a secondary market, but it might be a great fundraising tool for them, or they might be able to do something that makes it immediately relevant for their investors. But we'll start to see a few flavors pop up also within security token offerings that that get a little bit sharper on the benefits for the type of business that you are, rather than really presenting a lot of the benefits we are as kind of a catch-all, because it's simply not true. We need to get as a whole smarter on the sweet spots where, okay, this company size has benefits on the buy as well as the sell side by doing an STO or a digital security offering. And there will be a few sweet spots like that. And that's really where I think we'll see a lot more clarity on in the coming year, and also a lot more focus on those type of issuance, because it's not a silver bullet for just any business.
And the final question, where do you think is the biggest opportunity right now? So some people are looking at issuance platforms, some are looking at exchanges. You've got companies building out the data layer, because essentially, as you mentioned, information asymmetry is a huge issue within the industry. Where do you view the biggest opportunity at the moment?
To start a venture in, or?
That's a good question. I was thinking more the investing side, but...
Right. That's a good one. Well, obviously, if you see that an STO is obviously case by case, right? If you believe in the company behind it, then by all means go for it. If we're talking a little bit more picks and shovels, then
yes,
I think exchanges can be a strong bet if they can prove that they are their probability of acquiring the right licenses, because that's ultimately where it will begin with, and then subsequently they need access to interesting assets and user base. If they can show traction on those three, then it could be a very interesting investment proposition. Primary for the short term, maybe, or if they have a strong acquisition plan, like for example we discussed pre-call, it might be that some of these primary platforms want to get acquired by the Nasdaqs of the world, and if that's their goal, and if they have a very strong strategy in place and they can show that to investors, then it might be a great play. But I would really look at, do they tick the boxes, and do they have an idea of what an exit looks like in their market? And then it could be extremely strong. And when we look at the protocol layers, can also be a very, very strong investment, but it needs to be very crisp on what it adds. Like you say, it's no easy task to challenge Ethereum or traditional IT in the securities markets, right? So you need to have a very, very good idea of what you're solving, or what's unique, or what it is that you're bringing. And then when we look at it, we probably spent over a year behind the scenes, while obviously performing all the technological innovations, the bulletproof libraries and the consensus, and building all of that stuff out, but also really crisping up on what is it specifically in these markets that we need to add, or that we're improving on. So I think protocol comes with a lot more R&D, because the options are quite many, and you need to really, really focus and do something extremely well, whereas an exchange is conceptually simple. It might be trickier to do well, but the business model, the transaction fees, we need users, we need projects, and in a nutshell, that's what it is, meaning that it's easier to see if you're on the right track, and it's also much easier to explain to potential investors.
That's an excellent point, and I completely agree, especially with the way you break it down in terms of the timeline. I don't think it's going to play out that we're going to see all of these things do very successfully at the same time. We might see a trend and everything do decently, but it's certainly going to be things like primary issuance. It's relatively simple. It's already happening right now. Yeah. There's a lot of value in that right now, whereas exchanges, there's not a lot of liquidity. There's very little fundamental value, but they have huge potential value for the future. And the other key point you mentioned there, which is huge, and anyone watching this, I really want them to remember, it's licenses. There are so many companies I see talking about how they're going to do this and that, and then you ask them, and they say, "Yeah, we're applying for a license." So if you get turned down, that means you can't do any of the great plans that you have. Without a license, you're essentially an idea.
And these are not easy licenses. It's not like you're applying for, I don't know, something that gets handed out. Like the key thing that you should look at when you check these propositions is ask them which license do you need to operate,
Yep.
and then they'll probably say, ABC license. Then you should see how many of those were granted. For example, the last 12 months by whatever the issuing institution is in your jurisdiction. And then in Europe, for example, many of the security exchanges are going for what's called an MTF license, a multilateral trading facility. And you see that typically on an annual basis, you see like 3 per country per year, something like that, being issued. Okay. And then the question becomes, how are you going to be one of 3? Because the others are like, Euronext and this, and like really big, serious players, right? And if it's a license that is issued 5 times a week, okay, well, then these guys can probably get it, right? And so you let the data do some work for you, because if it's an extremely rare and difficult license to get, then and there's no extremely strong reason like, oh yeah, we've already gotten it in a previous venture, or we're bringing this guy in that is an expert, then there's no real reason why they should get it, to be honest.
Another fantastic point. Right, well, let's wrap up with our final question, which is, same as before, if you want to leave the audience with a message, could be about crypto, Dusk, security tokens, or just life in general, what would you like to say?
A very good point. We've just been philosophizing a little bit on the security token landscape. I feel like I haven't name drop Dusk enough, but I kind of like it. It's more natural. I don't know. Follow the projects you love, especially as a crypto investor. I think cut the teams that you love and follow a little bit of slack, because the regulated space is going to be a little bit slower than utility Wild West that the space is coming from. So bear with them. I know of dozens of great teams that are building amazing things. But it won't be on kind of the weekly cycles that we saw a few years ago, right? Conquering the financial markets and all this other good stuff comes at a certain pace. And I know, bear with each other, and let's continue to build something awesome.
That's a fantastic message. Well, thank you so much for joining me.
Absolute pleasure, and thanks for having me.